Alright, in this video, I want to show us how to take profit from our crypto trades. I understand that lots of people don't actually know how to take profit, and that is why some people, when they buy a coin, they will be in profit after a very long time, or after some times you will see that all the profit is gone. They've not made one kobo, they've not made anything. Some people struggle to make money from this space, not because they are not seeing profit, but they don't know how to take profit. So I'm going to show you how to take profit in this particular video. All right, you're welcome to Blockchain Plus. If it is your first time of visiting my channel, please do wait to hit the subscribe button, because in this place I drop a valuable content like this, educative content like this, that will teach you everything you need to know about the crypto space. And if you really want to become successful, know how to trade, know how to invest in crypto and become successful, you can join my academy, where I teach people, I guide people, and I mentor them, and they become successful trader. It's really easy to join, and my academy is also very cheap. With just 18,000 naira for now, you can join the academy for 1 full year access, and you will learn a whole lot. That is not just all. You also get access to different portfolios that you can invest your money on, especially those gems that will make you the real money that you are looking for. I do all of that in my academy, and if you want to get access to it, that is the amount you pay, just 18,000 or $10, you get access to it. All right, with that said, let us just dive into today's video, which is how to take profit from your crypto trades. All right, so before I tell you how to take profit from your crypto trade, I also want to first of all make you understand that profit taking comes in different types. There are the three major types of profit taking when it comes to trading cryptocurrencies. The first one is actually when you manually close all your positions. You just close everything, take your money out of the market, or you convert it to USDT. The second one is when you set your take profit levels. You just set your take profit levels, and when the market hits those levels, and you take your profit and you move on. Then the third one, which is the last one, is actually when you use trailing stop. So I'm going to show you these three methods of taking profit from the market. The first one is very easy, which is manual closing. So let's go over to our chart. As always, I'm going to use either Bybit or Binance. So for this case, I'll be using Bybit. So now this is Bybit. Let me just open a coin. Okay, let me open Sonic. Just open one of the coins. Okay, no, this. Okay, let me go to daily candle. No, let me don't use this. Let me use Solana. I want to use a coin that has been existing for a period of time. So this is daily candle, right? Now, if you look at this daily candle, when okay, good. If you look at this daily candle, if you look at this market, this Solana has hit $260 before. This is it here. You can see it, $260, which is here. Now, before it came down all the way to, you can see it came down below $37 around here. It's around $7, from $260 to $7, which is a huge loss for those who will be holding it. And that is why I've told my students, I've told them what to do during this bull run, so that they'll actually make the money from the market, not holding and holding and holding and believing that it will keep going up. No, the market does not always go up forever. There are two seasons in the market, the bearish season and the bullish season. The bullish seasons are always shortest. The bearish season is a long suffering period. So if you don't make money during the bullish season, my dear, the bearish season, you are going to struggle. So I've already told them what to do during this bull period. So let's say now at this point of Solana. Let's say you now bought this coin. Let's just say you bought it around $60. Now, because I already know that this market has hit $260 before it hit $260, there is a level here which is this high. You can see it 134. There's another level here which is 197 before the 260. So those levels that I saw, 134, 197 before 260, those are the places I'm going to set my take profit. So that is the second one, the second method of taking profit. This method is the most effective. Why I say this is the most effective is because you don't put sentiment. You're not trading the market with sentiment when you actually work with this set take profit method. The reason is because once you put it, even if you're in the market or you're not in the market, whether you are sleeping, you are working, you are doing any other thing, once the price of the market gets to that level, it's going to trigger your take profit and it's going to sell your coin for you and keep your coin and keep your money in USDT. Remember, this is Solana USDT. So let's say the first one I set it at 134, which is here. Set it at 134. How do I set it? Now I have bought the coin. Let's say I bought 100 pieces of Solana. I bought 100 pieces of Solana and then I set 50 pieces of it at 134. I bought it at 60. So setting at 134 means I've already had over 100%, right? So for me to do that, I'll come to sell. This is sell. I'll click on this sell button like this. Then I'm going to leave it on limit. I'll leave it on limit. I'm not going to change it because I want to set my take profit. So I'll leave it on limit. Then you see this price. I will not put this price. Remember, we bought at 60. So that time the price has not gotten to 190 something. So I will not put at 134 like this, the price. Then I will set the quantity, let's say 50. 50 pieces will now give me 6,700. Then I will now click on what? Sell. So once I click on this sell, it means it has added my own to the queue. So once the price, anytime the price gets to 134, automatically it will sell. Then once I set this number 50, remember I have 50 left. I have 50 left, right? So the next thing I'll come here, I'll increase here from 134. The next price was what? 197. So I'll put 197 like this. Then I'll now put the last, I'll put 30. So 30 will give me 5,900, right? That is what it will give me. Then the last price, which is 260, I'll now come here and put 260 here. Then I'll set the last one, which is what? 20. So 20 will give me 5,200. So you see how I have spread it in 3 places. I am selling the first one 50% of my portfolio at the first take profit. The reason for that is because in case the market reverses, in case the market dumps from that place, you know that you've already sold 50%, you've recovered your capital from that 50%, and you've also made some profit from that 50%. So the other 50% that is remaining, you are using it to pursue more profit. So this is the most effective way to trade the market using this limit orders. You understand? Now, after this method, I hope you've understood how this method works. You understood how it works. Okay, let me just, if you don't understand it, watch the video again so that you understand it, because this is very, very important. Now, the third one, which is the trailing stop I talked about. Let me go back to the sell again. You've bought your coin. Now, you don't want to sell all, or you don't want to sell at 134, which is the first take profit. Now what you do, instead of using this limit order, you change it from limit order to, you see this trailing stop, you put it at trailing stop. Now when you put it at trailing stop, you can now see here percentage. There's a percentage here, retracement 5%. There is no percentage in this place. This is 5% and this is 10%. So let me explain this one first. This no percentage means you can put your own percentage. Let's say I put it at 3%. I want it to be trailing at 3%, right? Now, this percentage now, you see here, is by what? By rate. Price retracement in terms of percentage from the best price recorded since activation, then by distance. So I'm just going to leave it by rate, and then I'll close here. Now what I will now do, once I put it like this, now you see here that says activation price, which is activate price. Now this is where I'm going to set my price. Please pay attention to this particular one, because this one is actually very tricky. So what happens here is, if I choose 5% first, let me choose 5%. Now I choose, let's say 130, or let's say 134, which is the first high, the first TP. You remember? Now at this 134, once I set it like this, remember we choose trailing stop, we are in percentage 5%, then 134. So this means that once the price hits 134 and goes 5% above 134, it activates my trailing stop. So as long as the market does not retrace back 5%, it will keep moving me up. It will keep moving me up to the next level with 5%. Let me try and explain. This particular one is always very tricky, but let me try and break it down for you using a chart. So this is a chart, right? So let's look for, now this level. Let's say this level here, see here is once. Okay, I'm looking at 134. Let me look for 134. Okay, good. So you see at this level, let's say here, this level here is around 134. You see this level is around 134. Now it moves up to this other level. Let me use Dex trading view, so that I will be able to draw lines, because with the lines it will be easier for you to see what I am saying. So this is trading view. Okay, so yeah, so this is Solana USDT on Binance. So let me just open this. Okay, so now, first of all, you remember we bought at 60. So this is 60 here. So that's the place we bought. Now we set our trading stop to activate at 134. So this is 135. So this is 135. So let me just leave it at 135. So now let's assume that it gets to this 135 and then moves up. Let me take this one now up to somewhere around here, 143. So from 135 to 143 is not up to 5%, right? So let's look at 5% of 135. Let's see how much it is. 135 minus 5%, sorry, plus 5%, so it is 141. So now let's go back. So 141 will be 5%, right? 141 will be 5%. So let's look at it, which is somewhere around here. So now, once the market crosses 141, which with this candle it has crossed 141, now it starts moving. It starts moving up. Say it already crossed 141 and it start moving. Automatically, it activates your trailing stop. So once it activates your trailing stop, what it now means that is that it will be trailing your trailing stop with just 5%. Your trailing stop will be following the market with 5%. So it means that once the market goes from 141 to, let's say, 151, your new stop loss becomes minus 151 minus 5%. 151 minus 5%. So your new stop loss will now automatically become 143 here. So it means that as long as the market does not come down to hit 143 and it keeps going up, your stop loss will keep shifting, your stop loss will keep going up, your stop loss will keep getting to the next level until anytime the market comes. And of course, if you are using trailing stop at this point already, you would have been kicked out of the market because you see that there was a drop that came below all the way to this place, and this one also dropped. So this one would have kicked you out of the market. So let's go to the future and see what is happening in the present market right now. Okay, so this is the present market. Where is it? So now if you look at this place too, so at this point, if let's say you bought here, you bought this market now after drawing your support and resistance, you bought at 158. Now buying at 158, you can set your trailing stop to trigger after this high, which is 183. Now the high is just this top. So if you notice, after the market came and triggered your trailing stop, it started going up, up, up. And if you look at the market has not touched it, it was here, it touched it. And of course, you are not going to remain, in fact, it has not touched it. This is it here. And of course, at this point here, you will still continue to eat some money, making more profit until this dip happen. So this dip would have taken your 5% out. You understand? So that dip would have taken your 5% out. Now, what is the essence or what is the benefit of setting this kind of take profits? First, for the trailing stop, it helps you to maximize your profit. There are some times that the market just moves periodically and it keeps shooting up, 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 up. And sometimes for me, I like using 10% trailing so that it does not just activate and kick me out instantly. You understand? So with 10%, there is enough room for you to play. You understand? Then the thing is, once it activates and it doesn't hit your stop loss, your trailing stop as it's going, you have more room to keep making money, because your profit will be increasing. And of course, if your profit have increased to a point where you see that you're getting more money, the next thing is to actually get out of the market. You get out of the market and keep the money. So that is the benefit of this particular one. Then for the other one where you set your trade take profit levels, that one is what I prefer more, because that one I already see where the market is going to. I set my TPs there. If I set my TP in the first high, the second high, and the third high, I can actually leave maybe like 10% extra to see what happens in the market in the near future. But before then, I've already taken good money out of the market. So guys, this is just how you take profit from the market. Do not just leave your trades open to run. The first method, which is actually you closing your trade, you should be able to tell yourself when you are okay with the profit you are seeing. Don't just leave the market running, hoping that it will continue to go up forever. No, market does not go up forever. At some point, you have to take profit because the market will actually dump if you don't do that, and you will lose those money you've seen. Alright guys, so that is it from me in this video. Till I come your way again, remain blessed.